Hello and very warm welcome once again to the Tax Express, where we discuss GST updates and case law analysis. Hi, I'm CS Advocate Abhishek Goyal, and today I'm breaking down a landmark GST judgment that every taxpayer, CA, advocate and business owner must know. The Tripura High Court in Matters Sahil Enterprises versus Union of India has delivered a huge relief on ITC denial cases under Section 16(2)(c), especially where the supplier defaults. Let's understand the real issue. As we know, Section 16(2)(c) is one of the most debated and litigation-prone areas in GST. Section 16(2)(c) of the CGST Act says ITC is allowed only if the supplier actually pays tax to the government. But here is the problem. The buyer pays GST to the supplier, the buyer files returns properly, the invoice gets reflected in 2A or 2B, goods are actually received, and the buyer has tax invoices as well. Yet, if the supplier doesn't deposit tax to the government exchequer, the department says reverse ITC, pay tax again. This effectively means double taxation on an honest taxpayer. Facts of the case. In this case, Sahil Enterprises purchased goods, paid GST of ₹1.11 crore to the supplier. Supplier filed GSTR1 but didn't pay tax via GSTR3B. Department blocked ITC, raised demand under Section 74 on the recipient itself. The court asked some hard-hitting questions. How can a buyer verify whether the supplier paid GST? Is the buyer expected to do the impossible? Why punish a bona fide buyer for supplier's fraud? And the court clearly held a bona fide purchasing dealer cannot be penalized for the supplier's default. Denial of ITC in such cases is arbitrary and unreasonable. This would violate Article 14 and lead to double taxation. The High Court relied heavily on Delhi High Court judgment in Quest Merchandising, Supreme Court in Arise India, and Supreme Court again in Shanti Kiran India. All these cases say one thing very clearly. If the transaction is genuine and bona fide, ITC cannot be denied in the hands of the recipient. The department's remedy is to proceed against the defaulting supplier, not the buyer. The court did not strike down Section 16(2)(c)(b). This is notable and significant part of the judgment. Instead, it read down the section and held that Section 16(2)(c) applies only when transactions are fake, there is collusion among the buyer and the seller, there is fraud by the buyer. It cannot be used against honest buyers. Reading down means restricting the application to a specific circumstance or event. Final relief granted. The High Court set aside the demand order, directed restoration of ITC of ₹1.11 crore, clearly protected bona fide taxpayers. Why this judgment is a game changer? This judgment is extremely important because it protects genuine businesses, prevents mechanical ITC denial, counters arbitrary GST demands, and strengthens constitutional safeguards. So if your ITC is denied only because your supplier defaulted under Section 16(2)(c), this judgment is a powerful weapon. This judgment is an eye-opener for the department and the authorities as well. If you are facing ITC denial on the basis of Section 16(2)(c), do not accept it blindly. Instead, evaluate whether your transaction is bona fide, use this judgment effectively, and challenge arbitrary demands. If you found this video useful, please like, share and subscribe the channel and drop your comments in the comment section below. Follow the channel for more GST litigation updates and strategies. Thank you for watching.